Alright, in this video we're continuing our discussion of AUC Section 250 regarding the consideration of laws and regulations in our audit. And with this video we get to dive into the requirements for this AUC Section 250. So this will be our first video in the requirements, and it's in AUC Section 250.12 through 16 to give us kind of an introductory overview of our consideration of compliance with laws and regulations. So it says, as part of obtaining our understanding of the entity and in accordance with AUC Section 315, which we'll get to in a later video, we should obtain a general understanding of the following two things. First, the legal and regulatory framework applicable to the entity and the industry or the sector in which the entity operates, and also how the entity is complying with that framework. So we would end up covering these bases as part of our compliance with AUC Section 315. And so it goes on to say that we should obtain sufficient appropriate audit evidence regarding material amounts and disclosures in the financial statements that are determined by the provisions of those laws and regulations generally recognized to have a direct effect on their determination. And they'll explain a little bit more about this in the explanatory material. But we can carry on here and then look at the explanatory material here in just a second. So next, we say that we should perform the following audit procedures that may identify instances of noncompliance with other laws and regulations that may have a material effect on the financial statements. And they have two audit procedures here. The first would be inquire of management and, when appropriate, those charged with governance about whether the entity is in compliance with laws and regulations, and also inspect correspondence, if any, with the relevant licensing or regulatory authorities. And next, during our audit, we should remain alert to the possibility that other audit procedures applied may bring instances of noncompliance or suspected noncompliance with laws and regulations to the auditor's attention. And finally, in the absence of identified or suspected noncompliance, we're not required to perform audit procedures regarding the entity's compliance with laws and regulations, other than those that are set out that we just read through, and the requirement of the written representations at AUC 580. So they're telling us that this is pretty much it. This is all we can do as related to laws and regulations, unless we come across some actual identified or suspected noncompliance, which is what we'll learn in the next section. But in general, as we remember from the inherent limitations of an audit, this is a difficult thing to uncover because it's probably not something that management would reveal to us voluntarily. So primarily we have to remain alert through our professional skepticism. We have to understand the entity and its the regulations and laws that it's required to follow, and use our professional judgment to understand if it seems like that they might not be in compliance with their laws and regulations, and inspect documents if we feel like it's important. But that's kind of the extent of the requirements we have in this section, aside from written representations, which we'll talk about in a later video. So we've got a lot of explanatory material here that's going to help us understand exactly what we need to do. It starts at A8, and it goes through A18. So let's go down to those sections now. Okay, now we're down in the explanatory material. As we remember, we're required to obtain an understanding of the legal and regulatory framework of the entity that we're auditing. And so here, they've given us a lot of bullet points or things we can do to gain that understanding. So we could use our current understanding of the entity's industry and regulatory environment. We could update our understanding on those laws and regulations if we need to. We can inquire management about other laws and regulations that may be expected to be important to us. We can also inquire management concerning policies and procedures regarding compliance. So I'm sure they have some procedures that they do, or checklists and such, related to complying with their laws and regulations. We might also inquire of management regarding their policies or procedures for identifying, evaluating, and accounting for litigation claims. We might also inquire management regarding their use of directives issued by the entity. And we might also consider our understanding of the history of non-compliance laws and regulations that the entity has had, if any. So we see here there's a lot of inquiries with management to understand the laws and regulations that fall under that entity, as well as using our prior work with other clients or the audits of prior years. Next, we remember they wanted us, or we were required to recognize which accounts and disclosures have a direct effect, or which laws and regulations have a direct effect on the amounts and disclosures in the financial statement. So some examples of these types of laws and regulations might be the form and content of financial statements. For example, statutorily mandated requirements. So we would want to understand these requirements for the entity in presenting their financial statements. Also, industry-specific financial reporting issues might be important for them to be in compliance with, and also accounting for transactions under government contracts. And finally, the accrual or recognition of expenses for income tax or pension costs. So these are a few examples where financial statement amounts and disclosures would be directly affected by laws and regulations, and we would need to understand those and in order to see if they are complying with those laws and regulations. And then more indirectly, the entity might be liable for fines or litigation if they're not in compliance with other laws and regulations. So even though those laws and regulations might not directly relate to a financial statement item, they might have to record a liability, for instance, legal litigation uncertainties or something like that related to non-compliance with the provisions of laws and regulations. So that would be more of an indirect effect than a direct effect on the financial statements. And so additionally, some entities may have may have a major law or regulation that they have to follow in operating their entity, or else they would cease operations. For example, maybe the entity has a license, and if it were to lose that license, it would cease to exist. And in the case of entities that receive federal funds, if the grant were to be taken away from the entity, it may cease to have any revenues. So these are big risks that are related to laws and regulations that the entity falls under, and we need to understand how they need to comply with them, as well as have they been complying with them. And as we discussed, there might be indirect requirements for them, laws and regulations for them to follow that maybe don't directly affect the financial statements, but that if they were found to not be in compliance with those laws and regulations, we might need to record some kind of contingent liability or some kind of penalty, that sort of thing. So we need to keep our eyes open for those types of things as well. But of course, those are very difficult to uncover, and might not be possible for us to recognize all areas that they might be non-compliant, but we need to maintain professional skepticism. And as we discussed in a prior section, our responsibility for identifying non-compliance with laws and regulations related to the indirect effect. We're only responsible for limited procedures for specified audit procedures in paragraph 14. So really, if we don't become aware of the existence of non-compliance and the procedures that were in the requirements up here, then we're not required to do any additional work. And this is primarily because we're operating within a materiality right, and so we want to perform an efficient audit, and our responsibility is to uncover material misstatements that could be due to errors or fraud, and so we don't want to spend a whole lot of time in this area for potentially indirect laws and regulations compliance. And so we may request correspondence with the entity's licensing or regulatory authorities. For instance, we would maybe want to see if the entity received a letter saying they were not in compliance with a particular law or regulation. But this correspondence that they have with their regulatory authorities may be really extensive, and so we have to decide in our own professional judgment, under the circumstances, the extent of inspection that we want to do. We don't want to read every single document and spend the entire audit reading those documents. We really want to narrow in our procedures to the areas that are that have the highest risk. So we might consider the nature of the entity and the nature and type of correspondence when we're trying to decide which particular correspondence items we want to inspect. So next we discuss what to do when non-compliance is brought to our attention by other procedures. So things may come to our attention that might lead us to believe there's non-compliance with the laws and regulations at the entity, and that might come to us when maybe we're reading the minutes of the board of directors meetings, or when we acquire entity's management and their in-house legal counsel about certain things. Also, maybe performing substantive tests of details of classes of transactions, account balances, or disclosures. So while we're performing these procedures, it might turn out that we are alerted to non-compliance or suspected non-compliance. So in that instance, we might need to decide what to do next in relation to those, and we'll discuss that in the next video on audit procedures when non-compliance is identified or suspected.